We're also watching shares of Tesla after Goldman Sachs became just the latest to hit the EV maker with the downgrade.
But like you said, it's just following the train, right?
Yes.
The stock starts shooting up. We got to catch up. We got to catch up. So
we do have some other EV news though that's not Tesla related. Let's go to Kevin Green for that, our senior markets correspondent. Lucid with the deal here with Aston Martin, right? So what's going on, Kevin?
Goldman Sachs says after this stock has rallied around 108% year to date, it is beating the market, of course, and the market is giving Tesla more credit for its long-term opportunities.
Tesla has always out-innovated whenever in a crunch.
We're going to cover all that and more, so let's get to it. Tesla stock down today, a whopping 6% fall off, and the news media is losing their minds. Let's dig a little deeper, shall we? Over the last month, Tesla is still up 20%. Makes that chart look a little bit different, doesn't it? That's because year to date, since January, Tesla is up 123%, a doubling if you invested in January. Despite what the news media may have you think, Tesla has legs to run. Over the past 52 weeks, Tesla is still down over 3%. For more of the calamity, let's go ahead and hear what Yahoo Finance has to say.
Watching shares of Tesla after Goldman Sachs became just the latest to hit the EV maker with the downgrade, cutting it to neutral from buy, citing a difficult pricing environment that could weigh on the stock. Goldman joins Morgan Stanley and Barclays, who also downgraded Tesla last week. Goldman Sachs today joins a slew of other banks downgrading Tesla, the firm cutting shares of the electric car maker to neutral from buy, though also increasing the company's price target to $248 from $185. Joining us now, Yahoo Finance's Prasad Subramanian to discuss more with us. I mean, it's just like a pile-on at this point.
yeah, what it said is one's an occurrence, two is a coincidence, three is a trend, right? So we have a trend going on here. Again, pretty much the same kind of call with the other banks there. It's a valuation thing. They're talking about how it better reflects, the stock now better reflects what they think is the long-term view of the company, and downgrading to neutral as not as an overweight kind of position for investors. Talking about things like, they didn't see the round coming, right? They didn't see it coming, but they're surprised by it. But they think it's due to things like reports of better sales in April and May, not official reports, but just reports. Less discounting than they thought. The Model 3 getting the full tax credit, the charging deals, and then of course the AI sort of frenzy. So all that sort of led to this stock, a huge move for Tesla this year, in particular last May. So kind of a big deal there. So they mentioned that, but also they said the company's still well positioned. And like you said, they hiked the price target. They're really sort of behind there in terms of where the stock is right now. But they also actually hiked their estimates for next quarter too. So there is that for that sort of position move up higher.
It does.
Hike up the price targets, hike up the estimates. Obviously, Tesla is executing at a high level. So when they put out these research notes, it's like this Neapolitan ice cream of 3 equal parts. One of a bullish nature, one of a bearish nature, and one of a I don't know what the nature. And it further adds to the ambiguity of what Tesla's valuation really is.
I agree with Julie. I thought that it does feel like a pile-on. It's like if you can't beat the rest of the analysts, join them.
Right.
And it's funny because the downgrades are coming even as most of them are raising their price targets.
Right.
Yeah.
So they still expect the stock to
perform
be
better.
higher than they
Exactly.
Yeah.
Potentially, yeah, and for Goldman, they're still below where the price of the stock is right now, but they brought it up considerably, so they're confident of at least maintaining that level for now. But like you said, it's just following the train, right?
Yes.
The stock starts shooting up. We got to catch up. We got to catch up. So
exactly.
I know you follow this pretty closely.
Yes.
So yeah.
And I want to just talk about one other kind of EV play that we've been watching today, the LUCID+ASTON MARTON deal. What do you make of this?
I'm surprised to see that Aston Martin's doing this, and it's a good thing. But a lot of people have been waiting for Lucid to actually start licensing their technology. That was a big play for them because they make their own batteries, they make their own inverters, they make their own motors, obviously software too. So it's a sort of a big play that they have from an IP point of view. So good to see Lucid doing that with Aston Martin. They're going to take a stake in the company as well, in addition to some cash considerations there. So it is a nice deal to see for Lucid shareholders. I mean, the stock has been down a lot recently, so this is a huge pop today for them.
And Aston Martin got a big bump up as well in UK trading. Does Aston Martin make EVs already? Is it just a question of, like, how is the Lucid technology and their parts viewed in the industry? And will we see more other automakers maybe wanting to get their hands on it?
Before Pras gives you that answer, I kind of wanted to just touch on it. Lucid is in a weird, awkward position. The Saudi public fund owns the majority of Lucid. This deal with Aston Martin should add to the coffers in hopes of increasing production for the Lucid Air.
I tested the Lucid Air. It's remarkable, really powerful powertrain, but also very smooth, really well done, really dialed in. There is Motor Trend Car of the Year 2 years ago. So it is well received. So it is a best-in-class EV solution, I would say, for automakers. And this Aston Martin is supposed to have a car in 2025. They have no EVs out right now. And they were partnering with Mercedes to do these sort of things. Right. So Mercedes might take a step back, do more of their gas-powered car powertrains. But Lucid, I think, is their partner going forward for EVs in beginning 2025.
Don't look at me like that. I'm not gonna tell you to purchase Lucid at these levels. In my humble opinion, Lucid's inability to meet their production marks have nothing to do with money. Still a long way to go before Lucid is producing any meaningful volumes in the battery electric vehicle space. Beautiful, beautiful cars, well engineered. But unless you're selling them at $250,000 a pop, you're gonna have to figure out manufacturing, and that's where Lucid struggles.
We do have some other EV news, though, that's not Tesla related. Let's go to Kevin Green for that, our senior markets correspondent. Lucid with the deal here with Aston Martin, right? So what's going on, Kevin?
Yeah, we are seeing the stock pop here. It's up over 13% in the session. And earlier today, we actually did have Aston Martin and Lucid actually announce a partnership where Lucid will be providing its EV technologies, if you will, especially when it comes to their battery technology. Now, this is just another strategy that Aston Martin is trying to implement. They already actually have a partnership with Mercedes-Benz, but when we're talking about Aston Martin, it's a smaller company. So they actually rely on a lot on these partnerships in order to be able to bring their products to market. Now, they are planning on having their first EV by 2025, and this deal alone will actually allow Lucid to take around 3.7% stake into Aston Martin, which would equate to around 28.4 million shares. And it also looks like they're going to make phased cash payments to Lucid as well that would total around $232. So just another partnership that we are seeing in this space. This might actually be a little bit of a leg up when it comes to Lucid. It has been having some issues as of late. Obviously, supply chain issues have been a problem for the company, trying to deliver their products in a cost-efficient manner, as well as trying to weather the storm when it comes to this price war that we are seeing in the EV space. So this could be an avenue for them to be able to generate some revenue while also trying to capitalize and build up their primary business, which is trying to bring EVs to market.
So as we see the shares ripping here, I mean, it's almost like look, it's kind of one of those great moments where is it technical or is it fundamental? You know, because if Lucid doesn't hold up here, then you're looking at new 52-week lows. I mean, technically, we just put it in last week, but you know, charts you draw with thick lines, so $5.50 being the low. Is this the type of story that, you know, has trend reversal potential, or is this just like, hey, you know, we're still around and things are going okay for us, but, you know, this doesn't change our profit outlook or, you know, meaningful fundamental reversal?
Yeah, I think it's going to be both. I mean, from a fundamental standpoint, once again, this partnership gives them a little bit of, you know, more exposure on the main stage when it comes to EV technology. And if they're able to continue to build these partnerships up, they would be able to profit off of them. And they could also utilize that cash generation to be able to put forward towards their production facilities and trying to bring their cars to market. So I think from a fundamental standpoint, it does make sense why we are seeing this move to the upside. From a technical standpoint, yes, we are still seeing a downward trend line for this stock. I would say the next resistance level would be around $8.50. That would be key. And then the one after that would be $10. But we are seeing a fair amount of volume in today's session. If that could actually last, and we continue to see that throughout the week and throughout the next couple of weeks, elevated volume, along with a move to the upside, that gives bulls a little bit of confidence that there are some buyers here at this price level. That's what you want to see. But yes, if this does fizzle out here in the next couple of days, you could see potentially a move to that $5 level, which would be fairly significant for this stock.
The stock market is weird. Lucid up, Tesla down. Tesla dominating the EV space, Lucid on its way out. But we got a partnership with Aston Martin, so it'll make it easier when they want to acquire us for good. You didn't hear that from me.
Hey, well, it definitely helps kind of firm up their image also as like the super luxe brand. I mean, partnering with, the James Bond vehicle maker is a pretty easy way to now associate yourself with the highest of the ins in the luxury market. All right, pretty cool. Thanks, Kevin Green. Much appreciated. Lucid having a great morning here. Let's talk about that Tesla now with Renita Young joining us from the TD Ameritrade newsroom in Chicago, our senior markets correspondent. So this is now a few notes that have turned a little bit cautious here on Tesla lately, or at least are not calling for huge upside from here, Renita.
Not a huge upside, and just as Kevin said, it's a result of these analysts playing catch up with where the stocks are right now. However, there is not room, or not upside room risk, more so what this analyst is saying. So Goldman Sachs downgraded Tesla, and they took this stock to a neutral from a buy with a price target of $248. That is higher than the previous one of $185, but it is below the Friday close of $253.18. And Goldman Sachs says after this stock has rallied around 108% year to date, it is beating the market, of course, and the market is giving Tesla more credit for its long-term opportunities. The firm does understand the difficult pricing environment that new vehicles are facing right now. We've seen that happen, and that's a lot of the reason why we've seen these companies lower their vehicle prices. Hey, I saw evidence of it over the weekend, Oliver, while I was looking for a car. So I didn't just look for used cars, I looked for new, and I'm almost at a parity right now where I could get what I want for the price of a new vehicle, and that's the real world example of what could be happening right now. But Goldman Sachs also says that the trend in lower new vehicle pricing and the softening of the auto supply and demand for the industry, that's going to be a headwind for Tesla moving forward. However, Goldman Sachs does believe that Tesla is well positioned to maintain a strong position in the EV space. Oliver, I wonder if that has anything to do with Tesla now selling its charging to Ford and GM, and any others may come along. I'll be digging to see if analysts have estimated what kind of impact that would make on Tesla's business.
It's kind of frustrating. Difficult pricing? The shares better reflect Goldman's positive long-term view? Kind of feels like a cop-out. These institutional investors have a responsibility because they manage other people's money. Better to take marginal profits and live to trade another day.
Yeah, the fact that they've had to bring their price targets so far up, and then also say that it's no longer a buy. It's kind of one of those again where we have to take it a little bit, I think, with the grain of salt, but still, when it's Goldman, people pay attention to it. And the fact that they're realizing that there are still some, proving that needs to happen to justify the rally is kind of interesting, and it obviously not exactly helping with stocks flailing the last couple days.
Mentioned earlier, another downgrade for Tesla this morning, which extended the trend that we saw from last week. So why are the analysts starting to turn a little bearish? Let's talk more about this. Emil Michaels with us, Chairman and CEO of DPCM and former Chief Business Officer of Uber. Good to see you. Thanks for being here. So we've had multiple downgrades. I mean, today we had Goldman Sachs, they moved to a neutral from a buy. And moving that target, though, a lot of them are moving their target higher because they have to get closer to the current price. The new target's 248, up from 185 in this particular case. But Goldman is one of several names that are cutting their thoughts here on Tesla. What say you?
Well, let's take this in context. While Tesla's down 6% over the last week, it's still up 23% for the month, in the last 30 days. So a little volatility at the end here as it relates to some of these new earnings or price projections kind of makes some sense. Cathie Wood's been selling out a little bit. You have this quarter end phenomenon where people are taking profits. So I don't know if this is a sort of material thing, but I will say the things to think about with Tesla are the Chinese manufacturing of EVs is growing dramatically. If you look at those numbers, and the exports that's going to represent to other Asian countries, that is a threat to Tesla. But I think on the other side, what you've got to consider with Tesla is Ford and GM agreed to use their charging standard, Cybertruck coming soon. There's a lot of tailwinds for Tesla too in the future, but it's hard with the China overhang.
China overhang. Tesla cannot make the entire world's supply of battery electric vehicles. That's not going to happen. Other players need to be in this game, whether that be a Chinese manufacturer or European manufacturer or one of the legacy OEMs here in America. Tesla needs these individuals to pursue this with reckless abandon. The Chinese are just a little bit ahead of everybody else. But don't get it twisted. Tesla is not worried about anybody. Who really should worry about the Chinese auto manufacturers are the manufacturers based out of Europe. Manufacturers other than Tesla based out of America. The auto manufacturers based out of Japan, who aren't really pursuing EVs like they should have been 5-10 years ago. But that's another story for another day. Tesla is synonymous with electric vehicles.
So, I mean, they're all talking about the difficult environment for new vehicles, and that's part of the issue. It's not that Tesla is a terrible company. It's also just the current environment. If you were to play devil's advocate, what might they be saying when they're making these cuts, and can those be turned around? I mean, if you said the environment, then, hey, the environment might improve.
Yeah, look, if I were to speculate, I would say, look, we are in a high interest rate environment. People do take loans out to buy cars, 5-year loans, and those lines are higher than they've been. And that environment is one thing. The other thing is the competitive environment. It is true that every auto manufacturer, especially after the Inflation Reduction Act, is doubling, tripling, quadrupling down in EVs, and that market's going to get crowded. So those things are legit worries that Goldman Sachs or anyone else can have. But Tesla has always out-innovated whenever in a crunch. So you have to, believe in the optimism. I think there's optimism built into the stock price already. But add that now to the charging kind of compact that they had across the U.S., the Inflation Reduction Act subsidies that they're going to get, and some of the new products they have. And I still think it's really one of the best, if not the best, auto company stock I'd buy in the world.
That I talked about the environment, I mean, that was more towards Goldman Sachs. Morgan Stanley was talking more about the stiff competition, and that is in fact growing. And there are others who would say that Tesla's just still the clear leader, long and far away the leader. In fact, making new deals of all kinds, including supercharger deals.
Right. Yes. And remember, Chevy Bolt, which was their EV, came out in 2016. So they've had competition for a long time. But it is true, Goldman Sachs and Morgan Stanley are right that the environment is absolutely getting more competitive. But the thing to note, and look at the California law that's banning combustible engines, the market for EV is growing incredibly fast because of all these state and country mandates about how many EVs you have to have. So Tesla will now be playing in a world where the whole world is transitioning to EV. Yes, they'll have more competition, but are they going to be able to sell more cars? I think yes.
And that's the only real metric that matters. I don't care how many other players are in the game, as long as Tesla is selling every car that they make while breaking production records quarter over quarter, year over year, with industry-leading margins.
It could also be an AI play. I mean, Elon Musk himself has said it certainly is an AI play in that he talked about OpenAI and ChatGPT and how Teslas are driving around on their own in California and Texas, and noted that they wouldn't be able to do so without AI, and praising this possibility. I mean, could this be the kind of stock that doubles, for example?
Oh, yeah. I mean, there is no company that's further along in self-driving cars besides Tesla. And
I'm sorry, could you say that again?
Oh, yeah. I mean, there is no company that's further along in self-driving cars besides Tesla.
That's what I thought you said. Continue.
And Waymo, which is part of Google, is just a software. They don't build cars. So Elon's building the full stack. And he's been doing this for a long time, collecting data, using AI to process that data and help the car make decisions. And that's only going to get better with all these new technologies that are coming out in AI. So, the notion that there are going to be a whole bunch of self-driving Teslas out there creating a network that like Uber has, where you can call a car, is really becoming more and more of a reality than it ever was. And he is far and away the leader in that game with Tesla.
I don't think he was supposed to say that on national TV like that. You might be labeled a nut job like the gang over at ARK Invest.
Understood. You had a time that you were with Uber, and that's something people are still waiting on for Uber as well. Thoughts there?
Yeah, look, Uber sold their self-driving car division. So they decided it was too expensive. And I think that was the right decision, because it cost billions and billions of dollars for technology that's 5-10 years away at the time. I do hope that what happens is the self-driving car technology that Elon's building, I do hope actually other companies develop it, like Toyota, GM, or Ford, and then those cars could sit inside the Uber network. So you can call a car and it may be driven by a human driver or a non-human driver. And I think that's sort of the future. It's a far away future, but it's a future. And I think Uber's actually pretty well positioned not to develop the technology, but to use it.
Oof, boy, that's some wishful thinking. In short, the sky is falling. Panic sell all your Tesla stock. Make sure that you don't leave any kind of room for error, and then invest in Lucid, because they've partnered with Aston Martin. That's the future, right? I'm just playing. You're too smart for that. I can't get one over you. Well, that's all I got. Be easy. Peace.